Hello and welcome to the Flux News Afternoon Update. I'm Lisa Aziz, live in London. We are the first and only energy market-specific news channel in the world. Coming up, the French President Emmanuel Macron says the endless accumulation of new tariffs from the US is fundamentally unacceptable as the row over owning Greenland goes on. The UK government is standing firm on its decision to hand over sovereignty of the remote Chagos Islands to Mauritius after a decades-long dispute, despite criticism from President Trump. Also, China's plans for a huge new embassy in central London have now been approved by ministers, despite opponents warning it could be used as a base for spying and pose security risks. And covering off what it's all meant for the oil and derivatives markets, we'll have a live trading update from the main desk right here in London with Manny Newman.
Today, we have been littered with additional CPC issues, which is feeding through into the strength in Dated Brent. It's been the main mover of the market today.
Well, in the last few hours, the French President Emmanuel Macron has said the endless accumulation of new tariffs from America is fundamentally unacceptable. He's added that's even more the case when tariffs are used as leverage against territorial sovereignty. Macron's addressed the Forum of World Leaders in Davos this afternoon, just days after Donald Trump announced new tariffs for countries that oppose his plan to own Greenland. Earlier, the US leader said there was no going back on his plan, claiming Greenland is imperative for national and world security. And Trump shared a message, apparently from Emmanuel Macron, in which the French leader said, "I do not understand what you're doing on Greenland." Well, this is how the French leader hit back.
It's clear that we are reaching a time of instability, of imbalances, both from the security and defense point of view and the economic point of view. Look at the situation where we are. I mean, a shift towards autocracy against democracy, more violence, more than 60 wars in 2024, an absolute record, even if I understood a few of them were fixed. And conflict has become normalized, hybrid, expanding into new domains, space, digital, information, cyber, trade, and so on. It's as well a shift towards a world without rules, where international law is trampled underfoot, and where the only law that seems to matter is that of the strongest, and imperial ambitions are resurfacing. Obviously, the Russian war of aggression against Ukraine, which will enter into its fourth year next month, and conflicts continue in the Middle East and across Africa.
Emmanuel Macron there speaking in the last hour or so. The European Commission President Ursula von der Leyen has been addressing Davos delegates, including business and world leaders as well. Earlier, she said it's time to build a new independent Europe, that the EU stands firm with Greenland, is increasing its defence spending and can manage its own energy supplies.
We have made proposals on market integration and supervision to ensure our financial market is more integrated. This covers trading, post-trading and asset management, as well as driving innovation and making our supervisory framework more efficient. This will help ensure that capital flows where it is needed, to scale-ups, to SMEs, to innovation, to industry. And the third priority is to build an interconnected and affordable energy market, a true energy union. Energy is a choke point for both companies and households. And just look at the dispersion of prices across European electricity hubs. Europe needs an energy blueprint that pulls together all the parts. This is our Affordable Energy Action Plan. We are, for example, massively investing in our energy security and independence with interconnectors and grids. This is for homegrown energies that we are trying to promote as much as possible, the nuclear and the renewables. to bring down prices and cut dependencies, to put an end to price volatility, manipulation and supply shocks.
Ursula von der Leyen there. Also speaking at Davos through the afternoon, the UK Chancellor Rachel Reeves. That's a day after Keir Starmer's national address, where he called Trump's threat to impose tariffs on the UK very serious. US Secretary of Commerce Howard Lutnick and US Treasury Secretary Scott Bessent will be speaking at the forum too, as will Canadian PM Mark Carney. He's actually just said in his address in the last few minutes that the old world order is not coming back. Meanwhile, the UK government standing firm today on its decision to hand over sovereignty of the remote Chagos Islands to Mauritius after a decades-long dispute, despite criticism coming in from Donald Trump overnight. The US leader slammed the UK's decision in a Truth Social post about a deal that includes a formal transfer of Diego Garcia home to a key US military base. He said giving away the land was an act of great stupidity, adding that the UK took the decision for no reason whatsoever. Well, coincidentally, the US House Speaker Mike Johnson's been addressing MPs in Parliament today. He confirmed he'd spoken to the President in recent hours, and he said he very much wanted, though, to calm the waters with the UK on his trip.
We cannot fail in our responsibility to protect our people and their security. Amongst our allies, we see the UK and Europe stepping up as faithful partners here, and I want to declare that today. Whether it's NATO's nation's historic commitment to raise their investment in defense, which we applaud, or the AUKUS alliance deepening its cooperation in submarines and undersea defense, our partnership is proving that nations can prioritize their individual interests responsibly and at the same time make strides towards strengthening alliances and preserving the freedom and sovereignty of our nation states. And our current U.S. ambassador to the UK, Warren Stevens, who sits here up here with me today, said it recently very well. He said, "America first does not mean and will never mean America alone."
Mike Johnson. Well, it's certainly been an eventful first year since Donald Trump was restored to the White House. Flux News reporter Tony Waterman in Washington looks back for us now at an extraordinary 12 months with a firm focus on Trump's approach to oil production and the energy markets.
Within weeks of returning to the White House last January, President Trump sent a very clear message to oil and gas producers. The federal government is back in your corner, and he very quickly started to dismantle decades of environmental protections to pave the way for a resurgence in production. Drill, baby, drill, as President Trump likes to say. And his administration is now fast-tracking drilling permits, expanding access to federal land, and reversing climate-fighting rules around things like air pollution and greenhouse gas emissions. But this hasn't exactly translated into an unbridled surge in drilling or skyrocketing production, partly because oil prices have been steadily falling over the past year, which of course has been very good for U.S. consumers, but bad for companies and investment. LNG, though, has really been the bright spot. The administration has swiftly approved liquefied natural gas exports, boosting shipments to places like Europe and Asia, and this has been undercutting Russian and Middle Eastern producers. But oil production remains pretty flat, although still near the record highs that were hit in the Biden administration. This has been enough to challenge the price-setting power of OPEC plus nations. And as Trump was trying to hype the oil and gas sector, he also was throttling back these subsidies for renewables, and in some cases tried to halt the projects altogether. And this has really transformed the energy sector here in America, with more than $32 billion in clean energy investment being abandoned. But of course, the biggest impact has come from President Trump's tariff policy. New duties on steel and aluminum have impacted nearly every aspect of the energy sector. It's raised prices for pipes, valves, drilling equipment, wind turbines, and this is eating into the profits of U.S. and global companies alike. And these trade wars, particularly between the world's superpowers, the United States and China, they have created a lot of instability, causing oil markets to swing as these traders try to weigh out the risks of geopolitical disruption. This has been muddied even further now that the U.S. is effectively running Venezuela's oil industry after the military deposed President Nicolas Maduro following what had been a months-long campaign of blowing up alleged drug trafficking boats. President Trump has been pushing U.S. oil majors to invest in the country to help bring this sector back from the brink. They have been very cautious, but if the U.S. can successfully increase Venezuelan production, it could, some experts say, dilute OPEC Plus's market-setting power and also squeeze Russia, China, and Iran, who are major players in the Venezuelan oil market. Expanded sanctions and the boarding of these sanctioned oil tankers by the U.S. military, 6 at this point, could also disrupt supplies, impacting prices, as could Trump's threats to tariff 8 European nations and NATO allies that have spoken out against his threats to acquire Greenland, either by force or by sale. All of these factors are forcing countries to rethink supply chains and geopolitical influence. Tony Waterman, Flux News, Washington.
Tony, thank you. Elsewhere in global economic equities and energy news, Japan's bond market, that's under real stress just now, with 30-year government bond yields jumping 30 basis points in a day in a $7 trillion market. It's happening as Japan carries very high debt, faces a shrinking population, and discusses unfunded tax cuts, pushing yields to their highest level in 27 years. Prime Minister Takachi set to dissolve Parliament on Friday. US bond yields rising too alongside Japan, with the 10-year up 5 basis points after a long period of unusually low volatility, which makes sudden moves more dangerous. As a result, the dollar falling, equities sliding, while precious metals, though, still jumping, silver up around 5%. Back home, wage growth in the UK, that's eased to 4.5% between September and November. Official figures suggest, following a sharp slowdown in private sector pay increases. The pace of pay growth for those employed by private businesses slowed to the lowest rate in 5 years, according to the Office for National Statistics. In contrast, public sector workers saw their wages jump. But the ONS said this was likely due to pay rises being awarded earlier than in the previous year. And plans for China's new super embassy in London, they've now been approved by the government. It'll be built within the historic Royal Mint site, which is next to the city's financial district and almost overlooks the Tower of London. Campaigners and opposition parties, though, had called on ministers not to give the site the green light, due to it being very close to strategically important internet cables that support the City of London. Well, let's find out just now then about how the oil markets, currencies, equities have been reacting to all of that latest geopolitical developments. Very own James Brodie with me now, ex-trader, now head of the Flux Learning and Development Institute. Good to see you as ever, James. Right then, how's it all been impacting sentiment, mood? What's been happening?
Thank you, Lisa. If we start actually with Brent, we've just had a supply shutdowns there. So we bring up the Brent chart, we've seen that suddenly spiked in the last couple of hours. You can see the yellow line here is a short-term moving average. It's now clearly trending higher. It tried to pull back, but this is going higher, of course, outside the supply and demand factors. The dollar's weakening. You mentioned what's going on with yields going higher. It's not just Japan that's dragging the long end of the US curve higher, that curve steepening. It's a huge problem, particularly for Japan, with 260% gross GDP to debt. And also what we're seeing, if we bring up the next charts of NASDAQ, you can see that's just open today. They're off yesterday. That's breaking down. That's down 1.5%. So equities are starting to fall as well.
Yeah, pretty gloomy picture all round, isn't it? As we say, mainly driven by geopolitical developments. What about commodities in particular then? What's been on the move?
They continue to rise. Uranium's been up 10 out of the last 11 days. But if we bring natural gas up here, natural gas has jumped 28% in 2 days. That's a huge move. Firstly, we have a cold snap coming in the next week in Europe. Secondly, geopolitical tensions. We have natural gas supplies coming from the US, of course. That's something that Trump could turn off. And also hedge funds were short. They're being forced to bail on their positions. One thing we're seeing across all markets in the last 2 days, volatility spiking.
Yeah. Which again, to be expected. Yeah. And just to remind us then finally, James, much more key data set to emerge through the week?
It's a busy week. Wednesday, we have UK inflation. Tough one, Labour Party. You know, we had employment data out this morning. That's fallen 4 months consecutively since Labour have come in. Employment's fallen, inflation's gone up. So they're nervous about that one. Thursday, we have Australian employment. That's key. Australian market now has nearly 3 hikes priced in this year. So we're seeing other markets, we're seeing suddenly hikes, central banks being forced to hike. I certainly believe the 20 basis points of cuts priced into the US curve. If data stays as it is too much, that'll get unwound. Big data in the US on Thursday, PCE inflation data. That's important because it's the Fed's favorite inflation data set. And Friday, we have Bank of Japan set to make their rate decision. Nothing's expected at the moment, but of course, the whole Japanese equity or bond market, as I say, is up in the air at the moment. So that may come into more focus.
And the Prime Minister Takachi dissolving Parliament on Friday, do you think that might sort of calm things over there or not?
I think it'll add to the concerns. And what happens typically, these concerns, they become self-fulfilling. The move in the last 2 days, it's 31 basis points today in the 30-year. It's the second biggest 2-day move ever in Japanese bond markets. And as I say, 260% debt to GDP. It's a massive concern.
Have to see where it heads tomorrow. All right, James Brodie for now. Thank you.
Thank you, Lisa.
Right, let's get the latest on the markets and sentiment now from our main oil derivatives trading desk right here in London. Over to Manny Newman. Manny.
Hi, this is Manny with a quick market update. Today we have been littered with additional CPC issues, which is feeding through into the strength in dated Brent. It's been the main mover of the market today. So we've had the GFL rally around almost 20 cents, maybe a little bit more. Rolls have extremely well bid. A lot of trade houses, refiners, etc. buying. So it looks like the strength in the North Sea physical is not going anywhere anytime soon. On the wider market, we're getting, to be honest, a fairly subdued price action. The Dubai benchmark, we had some bank selling on the Brent Dubai contract earlier this morning, but it's very much quite range bound. All the other markets in the product space are a little bit inactive, to be honest. Gas oil, again, within tight ranges, similar with fuel.
Manny at the trade floor. Thank you. And covering the markets in Dubai for us now, let's catch up with Ramona Tafarj.
Hello everyone, and welcome to today's oil market update live from Dubai. Brent crude is hovering around its 100-day moving average as prices consolidate and bullish momentum begins to fade. In the news today, first, China's access to cheap Venezuelan crude is set to end. The final sanctioned cargoes are now arriving in Asia, leaving Chinese refiners with 1 to 2 months of supply before they must switch to higher-priced alternatives or pay closer to international market rates. Moving to Total Energies, the French major, they said that weaker oil and LNG prices will weigh on fourth quarter's sales volume. However, stronger European refining margin and higher upstream production are expected to support cash flow, helping offset softer market conditions. Third, Swedish investment platform Maha Capital is seeking U.S. approval to acquire minority stake in a Venezuelan oil company. This could become one of the first foreign investors in Venezuelan oil sector since Washington signaled a push to reopen the industry following the easing of pressure for Nicolas Maduro. And finally, workers at Peru state oil company Petroperú have started a 3-day strike following the country's plan to privatization. While the government has declared the strike unlawful, the company declares that fuel supply will remain unaffected.
Ramona over in the sunshine there, lucky girl. Not like that here. That is it though for today's Flux News Afternoon Bulletin. I will be back with you tomorrow at noon. Remember, you can see plenty more of our shows and market analysis on our website at flux.live, on YouTube and via the QR code on your screen. Bye for now.